This is Stephen Choi. What I'm doing basically is trading with Livevol X, which I think is a great trading platform, and I'm using my real Reg T account to kind of show people how I use it, and then as well as kind of seeing like real life way people trade. So the software right now is being used by market makers on the floor, and what I'm going to do is I'm going to try to come on every day at 10 o'clock and kind of give you a wrap-up of what I did and what I'm thinking for the day. So let's actually jump right into it. So RSX, as you guys know, yesterday I sold these March 22-21 puts for 45 cents because there was about 4,000 contracts traded here. 40,000 contracts. Let me actually pull it up. You see this bar right here. Basically 48,000 contracts traded. They were selling. Let me actually go to the chart. You see all these puts being sold at 40 cents. And what I did was I piggybacked it. Felt like it was a good trade. So I sold this. Today it's up 3.5%. An interesting note, as you can see right here. So this morning when I was checking it, I see another 23,000 contracts traded right here. Let me actually go to the stats tab. And as you can see, I'm not sure if it's the same guy or a different guy, but they are also unloading puts, but this time on the March 23 puts. So I decided to piggyback him again and sell it for 65 cents. Now, I know some of you guys might think, hey, Stephen, how come you only sold a 1 lot yesterday when the market was a lot lower and then you're selling 5 lot now? That's a very good question. I think in retrospect, I didn't know how much margin it was going to take up. Each of these took up like about 350 bucks. I should have probably sold 10, but generally my thinking is if I find out that some large trader is correct, what I do is I'm more comfortable piggybacking that trade the second time around. So the first time, I don't know if this guy is going to be correct or not. I just generally agreed with the trade, so I went with it. But this morning, the March 23 puts, when he started selling those, or maybe somebody else, my general thinking was that if he was correct this time, he'll probably be correct for the March 23, and I'm gonna piggyback his trade. So I sold 5, and yesterday I should have probably sold 10, but it is what it is, and I'm gonna see if I can get away with it. So you see these March 21 puts, they're 15 bid at 25. I'm actually gonna try to buy these back, paying 15 cents. Generally, if you did a trade and you made more than half your money on the first day, sometimes you have to kind of see maybe I should close it out or not. But basically, for all of you guys seeing what I'm doing is I'm going to be paying pretty close attention to this RSX because my viewpoint is this whole thing with Ukraine is not over yet, and any kind of, you just can't assume everything's going to be great and hunky-dory when 2 days ago or yesterday it was it was panic and everyone was worried about things. So a day later, you can't really expect the market to be higher than the previous day, but it is what it is. And so I'll be keeping a close eye. So if I see some, like if you look at these stats, if I start seeing some heavy option buying, puts all the calls, or if you look at the chart, you see how this vol is high, and it's one of the reasons why I like selling the put. I still like selling the put because it's pretty high relative to the 52-week average. Let me actually make it shorter. So right now it's still at 42, and I think most likely it might settle around the mid-30s. So yeah, I'm gonna sell when the vol's high. So I made money on the first trade, so I'm basically gonna go ride it the second time and push it. Not because I feel like pushing, but this person right here is also believing that it's a good trade, so I'm piggybacking their trade. So that's RSI. Let me actually show you guys. Actually, I forgot to show you guys my trading. So today I'm having a pretty good day. As you can see, I'm up about 2,600 total for today. A lot of it is ZNGA and Yahoo. Let me actually, and I covered both of them yesterday, but let me actually go to ZNGA first. And I don't want you guys to get too confused, because I'm going to show you guys what I did. If you look at all the trades I did today in ZNGA, that's a lot of trades. Basically, I'm not going to go through every one of them, but basically what I did was I rolled out of some of the calls. So originally I had this call, the June 3 4.5 call spread, because there was this massive reversal that was done a while back on the June 3 4.5. What they did was sold calls, bought the puts, and bought 7.5 million shares on a print. And as a Reg T person, I wanted to kind of mimic that trade because I liked it. So I bought the June 3 4.5 call spread. Basically, if I punch it up now, let's say I buy this and sell this. If you can see it, the midpoint is about $1.30, and that's what I sold it for. Now, the reason I sold it is the most this thing could be worth is $1.50, and I can lose $1.30 on it. So I figured I bought it for a lot less. I think I bought it for like 70 cents or something, 65. So I'm going to lock in the profit, and I'm going to try to roll up to another strike, because I don't know if you guys can see on this. You see these open interests. There's some guy who's doing, there's a lot of open interest in the 4.5 6 call spread. So what I'm going to do is I'm going to try to roll to the 4.5 6 call spread, getting out of the June 3 4 call spread. So what I want to do is I want to keep making money as ZNGA is going up, but also it has run up quite a bit today, so like almost 8%. So I just want to make sure that if it stops going up, I don't get hurt. So let me actually tell you what I'm thinking. So sometimes I use stockcharts.com just because I'm really used to it, and there's certain technical features there that I just like a lot. So if you look at ZNGA on a daily chart, you see this is the Bollinger Band. Every time it's kind of gone out of this Bollinger Band of 2 standard deviation, it kind of halts a little bit. So you see how it's gone really far out of the Bollinger Band. So it's one of the reasons why I feel like it might pause here for a little bit before it starts moving up again. Generally, I guess ZNGA had a conference yesterday where they announced some good news, one of which was that they're going to pursue gambling outside of United States. I think overall the stock looks pretty bullish. If I look at the monthly, you can see how it IPO'd, took a huge dive, and then now it has this nice little curvature going up. And I try to couple that with the volatility and order flow. So you can see how much order flow there are on these things. You see all these calls. Generally, they're bullish and they're buying premium. And I have seen this quite a few times where traders are buying like these little puts, I guess just in case, as they're leaning long. My assumption is I wanted to have a position that I could make money on if it goes up, but if it stays here, I can still profit. So I did all these trades, one of which was selling these March 5.5 calls. I did that to get some premium. So let me look at the portfolio. I'll go to the Greeks. I look at ZNGA, and you'll see in ZNGA, my theta, I actually close it so it's not as confusing. My theta is positive 55. So every day that goes by, I collect. I'm still long delta because I feel like, you know, I want to make money if it goes up, and then I have short gamma because I am long theta. Basically, the most important thing to look at is, and this risk chart probably shows better. So what is this risk chart? So if you look at it, it's 10% up and down. It's next 8 days, and these are the different days. So if I turn it a little, these are the next 8 days of my P&L. So my position is designed, so after these 4 days, after this week's expiration, my P&L is above, so I almost cannot lose right after it with the position I have currently. I also wanted to sell some options just in case ZNGA just hung around at the 550 range. So you can see that I'm making money down to 544. And you know, you guys might be asking, hey, what about when it's going down? What about if it goes down to $5 or 516? You're going to lose 880 bucks. That's true, but if you look at my profits for today, you know, I made 1,400. So I'm going to use some of this money, and I'm willing to give it back for the position I have in ZNGA. So I'm going to do this. What I'm kind of waiting for is for ZNGA to settle down, maybe around this range, the 550 range, before it starts going up again, and then I'll figure out how to position, you know, put on more call spreads. The thing I'm looking at right now are these call spread, obviously, because I've rolled out of those other ones 100 times. I want to buy the June 4.5, 6 call spread. Now, let me actually punch it up. All clear. June 4.5, 6. You see the midpoint is 81 cents. So basically, I would be risking 80 cents to make 70 cents. I'd rather do it like, I think I can get it for 75 cents. So I'm going to wait a little and see if I can get filled for 75. So I'm going to put it in for 75. If I get filled, basically my break even is 525, and I can possibly double my money by end of June on that trade. So as you guys know, it's probably been my best stock so far, just because I kind of know the company, you know, intimately know. I've seen the games, and I think that they will be turning it around. So I'm bullish on it. It's one of the reasons why I'm trading this as aggressively as I am, because I feel more confident. Okay, so recently I was just messing around, and somebody was telling me about this lady named Karen, the super trader, and apparently she, and you know, you guys can look it up on the web, so I won't go into detail, but basically what she does is she sells puts, like way out of the money puts in the SPX, and the out of the money calls in SPX, and she just keeps rolling them, and she turned 100,000 into 800,000, and right now I think she manages maybe a couple $100 million, and she's making 30% return, which is, you know, I've been a professional trader, and I got to say that's pretty incredible for somebody to do, just because as your account grows, it gets progressively more difficult to get the returns that you want. But I was so one of the things I generate a lot of ideas is this watch list trades right here. So the way I have it set up is I want to see every trade that's 1,000 or more. So basically this thing scrolls, and while it was scrolling, I found out about EEM, which is an emerging market ETF. So I see that people are selling call spreads. They're basically selling premium, probably because maybe they think it's gonna settle down. And so you see this dip that it had, and then it went back up. Maybe it'll kind of, hang out here for a while, which is with the volatility being this high, it might be a good way to take advantage. So what I did was I used the same concept, and I sold one of the March 40 calls, which is about 33 delta, and I sold the April, which is about 50 days out, April 35.5 puts. And I did these naked. I'm going to try it out, see how it works. If it works well, I think I'll continue to do it. I'm not sure how well it'll work on a Reg T account versus portfolio. It's probably more designed to have better benefit as a portfolio account. But for now, I'm just testing it out, so that's what I'll do. The other position that I have that you guys know is Yahoo, and I basically got long it because of my friends at Trade a Minute. What they do is they basically do a $100,000 challenge. They pick some stocks, try to turn 3,000 into 100,000, and sometimes if I agree with something that they do, I'll piggyback them. One of the reasons why I did this Yahoo was there were a tremendous amount of call order flow. So I felt very comfortable doing that trade because not only was it technically a good trade to do, but the order flow was dictating it as well. So it's one of the things I did. I also put on some trade in Alcoa. And the reason I did that was, and I'll punch it in right here. So yesterday when we had this huge sell-off in the marketplace, you see how Alcoa kind of like didn't move that much. I think it lost it might have moved like 10 cents or something. So I felt pretty comfortable that maybe there was some support in the stock. So in terms of risk reward ratio, basically the Trader Minute guys also picked this stock. But what made me trade it this morning was all these calls being bought. So you see these March 22/12 calls. You see how people are just loading up on these calls. Now, one of the things is, you see how this open interest, maybe there might be an indication, well, how do you know they're opening and not closing? And you're right, I don't know that, but if you see the trend right here of the open interest line, you can see it rising, and you can see the volume right here. So I think generally people have been creating larger and larger open interest on that line. As you can see, I'm down a little bit on it. We'll see how it goes. So that is what I have so far. Let me actually go back to my trading account. So I had a little dip right here. I'm having a very good day today, but I guess it's not really that exciting, because anybody who's long this market today is probably having a great day. I have this GM call spread still going, and Apple call spread. For those of you guys listening this for the first time, there are stocks that I like, and I'll put on some kind of call spread. In Apple, it was the 510, 530 call spread, because I feel like Apple's has a lot of support around $500, and I feel strongly that it'll be around 530 or higher by end of April expiration. So I put that on. Charter Communication, I sold this put spread, because the 2510, because I thought it kind of bottomed out and that they might kind of reconsider into bidding for Time Warner again, possibly if Time Warner keeps having difficulty closing with Comstock, which it's a long shot. But what is not a long shot is if this stock stays around here, I'm just going to collect premium every day, theta decay every day on it. The other one is GM call spread. Generally, I like buying stocks that are got kind of hammered, and then they might get a new CEO, like a management change, and usually I feel like the market gives the managers a little benefit of the doubt for a little bit, and then so there is a little upside usually more than downside. So that's about it. I hope you guys are enjoying this. Now, for all of you guys who are saying right now, hey, how do I get to try this? Just go to livevol.com, go to Livevol X, and then you can get a free trial. This software is actually being used, and I've mentioned this many times before, but it's actually being used by market makers on the floor. They use the exact same software, so it's not watered down or anything. It would be hard to believe that maybe a professional market maker might be using like a retail software version, but this is actually a professional version now that is available for the retail client. So I think it's pretty exciting. And what I want to do is kind of show everyone out there how I use it in real, live example and real live trading versus just kind of telling people the theory behind it. So if you look at, if you want to get a trial, go to livevol.com. Also, go to Livevol community. This is the community site. We're going to launch like a new kind of version soon, but I will be on every day from 10 to 10:30 talking about the market and doing actual trades. And you guys can look at how I dissect the information that I'm getting from Livevol X and trying to take advantage of trading. So the newest trades I did today, just for a wrap up, is RSX. I sold these puts for 65 cents. And then I did some EEM, and then I continued to trade ZNGA. So stay tuned. If you have any comments, feel free to write a forum in the community blog. I'm also located in San Francisco, so for any of you hardcore traders who want to kind of give me a visit in the office to see how I use the software live, feel free to do so. Just send me an email. My name is Stephen Choi. You can send it at stephen.choi@livevol.com. But I'll see you guys tomorrow. Hope you guys have good trading.